Every great market has a cycle. The housing market, equities, commodities, now crypto, and history has shown us that roughly every 20 years those cycles collide with devastating corrections. Right now we're approaching the end of one of those major cycles and the signs of a global reset are loading. And the big question here is what happens to Bitcoin if we do see a collapse? Will it face the same kind of brutal sell-off it has in the downturns in the past? Or are those days behind us as Bitcoin is finally the number one asset that could stand as a hedge, even a safe haven against modern day Great Depressions? Well, I'm going to be breaking all that and more down in today's episode. My name is Paul Sampson. Welcome back to DataDash. Now, before we dive deeper, I want to take a moment to thank our exclusive exchange channel partner here at DataDash, and that's Blowfin. Now, if you've been looking for a platform that combines both versatility and reliability, Blowfin really checks a lot of the boxes. Whether you're an active trader or more of a long-term investor, they've built out tools to fit both sides of the market. On the future side of trading, Blowfin allows you to go long or short on Bitcoin, Ethereum, and a wide range of altcoins. That means no matter what the direction of the market is moving, you've got the flexibility to position yourself accordingly. Futures traders will appreciate the speed and the professional grade interface that Blowfin provides as well. For those who prefer a more traditional approach, Blowfin also offers a wide variety of spot markets. Now, this is where you can simply buy and hold your favorite crypto assets just like you would as a traditional investment. This gives you the option to build a portfolio for the long run while still having access to active trading if and when you'd like it. And here's something I think is really important. It's that Blowfin constantly rolls out perks for new users. So whether it's deposit bonuses, trading fee discounts, or other promotions, there's generally something available. So if you're considering making the switch or opening your first account, there are usually extra incentives that will come along to get you started. And what I like the most is that Blowfin is more than just an exchange. It's an environment designed to give traders confidence whether you're chasing short-term setups or positioning for the next macro move. So if you'd like to come trade alongside myself and the DataDash community, check out Blowfin. The link is down in our description below. They're our exclusive channel partner, and I'm really proud to have them supporting what we do here. Thanks again to Blowfin for partnering with us, and now let's get back into the analysis. All right, folks, in today's video, it's going to be a little bit more of a macro outlook here for Bitcoin, but it's going to be a relatively, within the next few years, what I'm anticipating, or more so a comparison to really the only thing that you can compare Bitcoin to, which is gold. All right, so this is actually something I've been working on for a few years here. I've been kind of keeping track of it, seeing how things kind of started to play out. And 2024 was a very interesting year to me. One of the biggest things in history occurred during that year, and that was when the Bitcoin ETF basically went live. It's very interesting of that exact year for a couple of reasons. We're going to get down into it here in the video. And just looking at Bitcoin's price action through the years, this is on the weekly time frame. I mean, this is probably one of the most healthiest charts that you could ever see, right? This is a straight up and to the right, as up and to the right as you can get over time. So far, there's only been what we all know as the 4-year cycles that come into play, where you get these really huge moves to the upside, a year of consolidation or a bear market to the downside, big burst up to the upside again, 1 year down, big burst up, 1 year down, big burst up. So what's anticipated here is that we're going to be seeing, at least at the time of recording, around the end of this year, 2025, everyone's looking for another big year down to be a sizable bear market. A lot of these have been really, really big pullbacks here, right? You're talking about 78% to the downside, 80% plus to the downside here, and then back here was just about the same, about 87%. So almost 90%, 80% here, and almost 80% here as well. And many will anticipate that that's what we would see as we come into these areas here, assume that we're going to have a huge correction even from the area that we're at now, and 80% pullbacks would take us back down into, the $20,000 areas on Bitcoin. Now, folks, while I could make a huge case for why we could easily go back to $20,000, $30,000 Bitcoin at some point as well, this video is more so to point out the bigger picture here and the timing around these 20-year cycles, which I believe that Bitcoin and crypto is putting in the very first 20-year cycle right now, even though it's been comprised of several 4-year cycles in the interim while we're building this out. Again, for anybody that's new to me, I've been tracking the 20-year housing market cycle, which is also the economic cycle, the business cycle, however you want to view it. This was actually something that another analyst had put together named Philip Anderson. Anderson. There's also another gentleman as well. They've written many books about this stuff. And these are the last 4 iterations here of basically the overall 18 to 20 year cycle, really, right? So what I have here showcasing is the first 7 to 10 years, which is basically just your recovery phase. You have a mid-cycle slowdown right here for about 2 to 4 years, and then you have a couple years basically to the top. It varies, right? And also this is an overall 18 to 20 years, so it's a huge window of time. And it could be 1 year off, give or take, on either side, right? So these are not exact estimates by any means, but these are huge windows that we have seen time and time again. And again, it's all comprised of a start off, a run up, a mid-cycle slowdown met with a black swan event generally, and then there's about 2 to 4 years of sideways consolidation and uncertainty. There's always high interest rates, high inflation. Everybody expects a recession or a downward spiral to continue, only to see a face melting rally to the ultimate highs, and then we reset and we do this all again. These 4 years I have stacked on each area is basically the beginning year, the mid-cycle slowdown year, and then essentially the high, and then you come back and it goes again, right? So, and just a really quick overview. In the 50s, we had this initial run up. In the 60s, we had the Cuban Missile Crisis was our black swan event at the time. A couple years go by, high inflation, high interest rates, everybody expected a recession. We run it up to 1972. We re-begin this in 1975. In the 80s, then we had the Gulf War as our black swan event here. 2 to 4 years of uncertainty. Again, high interest rates, high inflation. Everybody expects a recession. We run it up to 89. We re-begin this now in 93. Run it up to 2001. 9/11 is our black swan event. 3 years go by. High inflation, high interest rates, right? Everybody remembers the dot-com bubble, 2003. Everybody was anticipating everything to crash and go lower. And we got the face melting rally continued up to 2007. Truly, 2008 is when everybody's marks the high, but the market truly topped in 2007. And that was our last notable high, really. So, just something I want to point out there is 2007 why. We'll be focusing on that here in a little bit as well. And then after that, of course, we re-began here. I've been tracking the crypto market alongside this as well, because this essentially was when Bitcoin was born, really in 2009, obviously. 2011 is when most chart activities started arriving. But in general, between the high and the low here, crypto was born. It has been on the ride with us so far for the next round here. We obviously had our Black Swan event, which everyone is currently well aware of, which was COVID. A couple years go by, 2023. If you recall, at the very end of 2023, everyone was anticipating 2024 to be a huge, down year. A recession was going to continue. Interest rate hikes had just occurred for the last couple years. And everybody was really, really fearful as we headed into the beginning of 2024 in January. And obviously, ever since then, it's just been a complete run up here. And this dates back to truly Q4 of 2023. So since Q4 of 2023, when we had high inflation, high interest rates, and everybody expected a recession to continue, we've been pushing up. Again, the 20-year mark that we recently topped out around was 2007. Just putting a simple 20-year high on that puts us around 2027 when the next high should come in. I've been targeting this 2026 to 2029 region. And more so than anything, that's just almost for myself personally, right? So everything I talk about in these videos is obviously just my personal opinion. I'm not a financial advisor by any means. I'm just interpreting information and trying to put myself and potentially some of the people in my community on the right side of some big moves, right? So 2026 to 2029 is an area of time where, for me, I will not be looking to add anything into, new investments, so to speak, or picking up new property, or just basically deploying big capital into brand new ventures at that time, right? Because in that window is when I fully anticipate the next Great Depression to hit. Everybody always asks, what is that even going to be? Everything's so bad right now as far as everything being so expensive and blah, blah, blah. The recession, depression, depression specifically, is really set off by job loss, essentially. So I believe truly that we probably will see 75 to 90% of all jobs basically wiped in the next 5 to 10 years. And the big portion of that will more than likely happen in the next coming years here. And the simple answer to that is AI. It just really is what it is, right? So there's a bigger picture than that. And all these videos I'll be producing about all this stuff here is going to kind of all tumbleweed into a bigger idea set. But as we're walking into this region here, that's the overall idea, is that the 20-year cycle potentially is going to end here in 2026 to 2029. My eyes are on 2027 and 2028. And what is that going to mean for Bitcoin, right? So I know that locally here we could see a little pullbacks and, go back to like 80K and all this stuff, right? But let's just say that over the next year and a half, the market actually continues to trend up, right? Goes against everybody. What they're thinking is we're going to have this huge 80% pullback in Bitcoin and all this stuff. What could it mean? Well, the number one comparison that I'm going to put this on is Bitcoin to gold, and especially now that Bitcoin has an ETF, because I'm going to show you how eerily comparable the two of them are and what we could see if Bitcoin picks up the same path that gold took basically back in 2008. So this is the historical chart on gold here, basically dating back all the way to, as far back as this goes, is like 1915, right? So this is well over 100 years ago, with all the price action that has occurred. Obviously, some of this is pretty wild here, but more so like let's keep it to the areas that we are well aware of and most of us maybe have even seen for the most part. And what I want to point out here is that gold, right, had a pretty, great run here up until about the 80s here, had a really nice cool down and then picked back up in this region right here. I want to focus on when gold received its ETF, the exchange traded fund, meaning that huge hedge funds and other institutions could essentially hold this and offer this to their clients, people of big wealth, really big money managers out there in the world. And the year that gold received its ETF was, I'll give you the exact date actually. It was November 18th, 2004. So essentially gold was sitting at about $450 back then in November of 2004. All right. And then I want to bring that up again in 2004. Just think about what the correlation I'm going to be getting to here on Bitcoin and gold. So the last So the last 20-year cycle that I pointed out earlier in the video here topped out, and everybody looks to 2008, right? Let's just say 2008. 2007 is truly when everything really topped. It kind of held off for a little bit, and then it had the rollover in 2008. So precisely 4 years before 2008, end of the 20-year cycle, is when gold receives its ETF. So there's 4 years basically for the institutions, the hedge funds, and big money managers to come in, essentially picking up this asset, transitioning from whatever they had into it, right? Gold, again, received the ETF exactly 4 years before the markets collapsed. And then this is how gold reacted during the market collapse from 2008 until about 2012, right? So while everything was in a major downturn, gold actually continued to hold its value. It saw a small 20% pullback. So, forgive me for this little chart here. But basically at the peak of 2008, right? So 2008, we're at 969. We pushed back down to 728. That's about a 20% pullback there. But then you'll see that we continued up all the way to 2012. Okay. And then we got the plateau, of course. But overall, I wanted to focus on that because in my opinion, this is where institutions and everything, they seek this out. This was the safe haven. This was the safe haven. This was the hedge. And at that time, in November 18th of 2004, when gold received its ETF, the current market cap of gold was $2 trillion. All right, we're going to come back to that in a second. So when did Bitcoin receive its ETF? It was right here in January of 2024. And in theory, if my 20-year cycle top idea is going to fulfill, we should see an overall 20-year market high exactly 4 years after that, give or take. I don't want to use the word exactly. Around 4 years after that, in 2027, 2028. Isn't it interesting, right, that we've had that occur now? And in theory, now that the institutions, hedge funds, and property, all these major investment managers have the ability to essentially migrate their funds into something additional besides gold that's already got a huge market cap. Bitcoin, which does not, is now there as well, right? So 20 years later, we have basically a brand new asset that is sitting at around the same market cap value with the same upside. Very interesting. So what I want to point out here more than anything is that I think that the 80% downfalls in Bitcoin, at least for the next 5-10 years, are probably gone, if they're not gone forever. By no means will I not openly welcome a $20,000, $30,000 Bitcoin, but from here, I just want to point out the neutral open mind that we may only see 30% pullbacks, from here, and every opportunity to buy the dip should be truly viewed that as on Bitcoin. Whereas I think that a lot of people in crypto have gotten away from that idea. Back in the day, the whole reason you would buy altcoins or anything like that would be increase your Bitcoin. There was even the very first few years we couldn't even trade in dollars, right? We had to buy, you can only trade and buy through Bitcoin sats, right? You could only go that route in the Bitcoin pair. And essentially you were trading, hoping to, double or triple or, higher ROI on an altcoin that you could basically get higher Bitcoin value out of. Over the years, everybody's kind of really withered away from that, and then everybody's went to the idea that Bitcoin won't make you wealthy. It's too, it costs too much. It's already too high. It's already ran. And if you look around us, look at how Bitcoin has, performed now in the last few years. Not to say that it has overperformed or outperformed everything. Realistically, even Ethereum, Bitcoin and Ethereum, if you paired the both of them up from 2018 lows, $86 Ethereum and $3,000 Bitcoin, at least from there. Even in today's world, like ETH is technically still outperformed Bitcoin in that sense. So it's all about timing, of course, which is when people get into the market. So all that to be said, that for me, again, my personal strategy here in the next few years, as I'm anticipating a large market correction, potentially one that we've never seen before. Again, going back to the 75% to 90% of all human jobs, more than likely evaporating. Due to AI. And I know many are going to say that's not possible and all this, and maybe it's not, but that's just where I am envisioning everything heading in the very near term here. What is going to be the safety net? Maybe it's not anything, honestly. I mean, we're probably going to have some big problems along the way regardless, but Bitcoin is one that to me is going to be every pullback is going to be a buy the dip opportunity, right? So, and I've been a big altcoin holder. I've been a big Ethereum holder for a long time. I still currently, more than anything, swing trade altcoins. And the shift back into, some of the Bitcoin holdings that I had in the past is going to be something I look to on some of these major pullbacks if we get them. And by major, I'm looking at like 30 and 40%. 30 and 40%, basically, if we go back to $80,000 Bitcoin or below, that's my buy zones, right? So again, of course, it's not blindly buy them at that point, but it's just something I'm going to be aware of and something I'm, going to be cognizant of if we get back to them. Assuming that Bitcoin and gold, have a very correlated run here, I decided to make this chart up here, which basically takes gold from 2004 to 2012, which we just looked at around the price action, where it was at the ETF time, and where we topped out around 2012 when the market actually ended up bottoming, right? The last major 2008 crash. When we bottomed in 2012 before things picked back up. This is the market cap for gold. This is Bitcoin for the years projected. So we just got our ETF for Bitcoin in 2024, so 20 years later, 20-year cycles, right? And anticipating the next 4 years to be when the market is going to correct, potentially up to 2032, where maybe we bottom out at again before things start picking up, right? Just a projection here. This is a straight up a what if. Bitcoin price, this is basing it off market cap. So we're actually just I took the exact market caps that gold was at, okay, throughout these years. So we went from 2004 at 2 trillion. Gold ended at 9 trillion in 2012. And I'm just mimicking what Bitcoin's price could be if we saw the same war path, assuming we're going to have that top in 2027. Bitcoin doesn't crash. This is actually the safe haven where many of the institutions and big players are going to be putting their funds into. And then just getting a piece of the overall, world currency here, getting up to 9 trillion, which at 2 trillion is where we are sitting at $100,000 Bitcoin. All right, this is projecting now for 2025, 111,000, which we are literally sitting at 115, 116 time recording, right at 221, which is where gold was in 1 year later after that ETF. 2026, which is 2 years later, compared to, again, gold after 2 years after the ETF, we're projecting, if we followed this, to see $150,000 Bitcoin. Now, of course, we're going to, this is totally this is a what if scenario. And there's going to be pullbacks along the way. This is maybe seeing like the highest dollar that this reached during that year, or what it could be at the exact high, right? We all know there's, big pullbacks and swings along the way. But this is what I'm anticipating out of Bitcoin. During a crash, I think that we could actually see Bitcoin accelerate, and it's going to be a slow grind to some of these higher levels here. And if you get all the way back down, or down in this $9 trillion area, again, potential, that puts Bitcoin around $465,000, all right, which by no means is a huge ROI for, the average person that's looking to come into the market with $1,000 and looking 100x and 10x. Obviously, you still want to you're going to have to go to the casino for that, right? The DGen, the Solana casino, and try to catch some altcoins. But if you have actual size in, the market or in your life and things that you may want to try to preserve the capital there, again, total risk. We don't know if it's going to completely go to zero. Just as anything else, I think that we'll have bigger problems no matter what in the next few years, either way. But big issues and big crashes like this generally net the biggest returns for those that are prepared and those that have a strategy. And that's just what I'm trying to do, what I'm trying to showcase. So this whole video is just kind of a overall review to show that with the 20-year cycle is coming to a head. For anybody that's looking to just get into the, the crypto market, the stock market, personally, I'm, been in this market now for almost 10 years, and I'm looking to fully exit this market for the most part, with the offset thing of looking to, hold or pick up on any kind of pullbacks, Bitcoin and Ethereum. And I do see a world that if the markets do see a sizable correction, that we don't see these super low numbers on Bitcoin. I think we actually may see a world where those low numbers where everybody jokes about, like, oh, you'll never see it under 60K. Never is a big word, but for a long time, we may not go back to those lower areas, right? So again, this is just a straight up projection, a what if scenario. I'm piecing together huge pieces of data that may not occur by no means in the exact fashion, but so far what I've been studying and what I've been tracking for the last almost decade has been pretty spot on as far as all these cycles and how they go. Again, I think that there's a really high chance that so many jobs are about to get wiped in the next few years. And that's what's going to trigger this Great Depression. I'd really even skip 2.0. I'd say that this is going to be Great Depression 5.0, to be honest with you. So one of two things: if you can take advantage of a move like that, awesome. If you can at least even just acknowledge it and be mentally prepared for it, that's at bare minimum. That's one of the biggest reasons that I come out and I do what I do. So hopefully I'm wrong in that sense. But taking out emotions, news, all this, just looking at cyclical data, this is what I see. So at the end of the day, none of us know exactly how this 20-year cycle is going to play out, but we can learn from history, prepare ourselves, and think critically about how Bitcoin fits into the bigger picture here. So whether it is the next safe haven or whether it still has painful drawdowns ahead, the important thing is that we stay informed and grounded, not swept up by fear or euphoria. And if you'd like to go deeper with me and my community, be sure to check out DataDashPro.com. That's where you'll find the Traders Club Discord and the Dash Report, where we track both crypto and traditional markets day by day. As always, thank you so much for tuning in. My name is Paul Sampson. This is DataDash. I hope to see you all in the next video. And until then, everybody, cheers.